We're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, we have ended a truncated week with cuts of somewhere around 600 points on the Nifty, and even the Sensex has lost somewhere around 1900 points for the week. A sixth straight session of weakness for the benchmarks, Yatin, but we'll take some respite from the fact that there wasn't a deep sell-off like we saw over the last 2 days in today's session. The benchmarks ended, in the negative zone for a sixth straight session, although it was a flattish close. Of course, with a negative bias. So Nifty managed to defend that 23,500 mark, Yatin, and just around that 200-day moving average mark. So yes, some bit of a relief, today, given the fact that today is the last trading day of the week, tomorrow being a market holiday. But the good part is that the broader end of the market staged a rebound. Mid-cap and small-cap indices gained in excess of 0.5%. Even the breadth was, kind of even Stevens today, tilted in favor of gainers. If you look at some of the pockets that were doing well today, autos, of course, got a fillip thanks to a rally in shares of Eicher Motors as well as Hero Motocorp. Other sector that was among the gainers was realty, but what didn't do well was the FMCG pack. The top three laggards on the Nifty today are from the FMCG basket. IT, Pharma, PSU banks are also some of the other pockets that continue to see weakness today. In terms of individual movers, Yatin, Eicher Motors, Hero Moto, HDFC Life, Kotak Bank and Reliance Industries, these are some of the notable gainers today. On the flip side, of course, as I mentioned, HUL, Tata Consumer and Britannia, these were the top laggards on the Nifty. Nestle was another one that wasn't doing well, and BPCL. There are concerns that BPCL may exit Nifty, right? Some brokerages have come out with report after the new additions in the derivative segment. So because of that, BPCL was under pressure. But Yatin, before we talk about the movers and shakers, there's a CNBC TV18 Global Leadership Summit happening, and a lot of market veterans have, come there, and they've been speaking their minds about the kind of correction that we have seen. You may feel that I am the eighth wonder of the world, but market veterans will beg to differ. They feel that compounding is the eighth wonder of the world, and in such a case, when we have seen such a sharp sell-off coming in the markets, they believe that patience is the key. You have to stay invested, you have to be patient, and some of them have even pointed out that such kind of corrections are actually come as an opportunity to buy. But of course, earnings pain is there. Ramdev Agarwal, of Motilal Oswal has said that perhaps it will take 6 months for earnings growth to come back, but patience is the key, and to pick up right companies at the right price. That's something that is the key. So of course, people are getting nervous, portfolios are bleeding, and they are thinking about how to really navigate this sell-off. But of course, all these market veterans that I mentioned, Ramesh Damani, Ramdev Agarwal, Nilesh Shah of Kotak, they've all said that India is an opportunity, and of course the last 25 years may have been a little easy for the stock markets. Next 25 years may not be that easy, but of course India as a growth opportunity is something that
in fact I think Nilesh Shah told when he was asked a question that FIs are selling so much, so what's the outlook there, he said that dugna daam dena padega. So the FIs which are probably selling would have to buy the markets again, and Ramdev was saying that they might come again when the Nifty is at 30,000. So yes, the FI factors is not a cause of worry. I think domestic liquidity is something which keeps the markets afloat. We have absorbed a lot of FI selling in the past few days, thanks to the domestic mutual funds and the HNI funds which are there in the marketplace. But yes, I think 3 to 6 months is something which market experts believe that would take for earnings growth to show up. I think we have the budget in February. By that time, I think Trump's administration will be in full swing. The entire new government in the US will start working. So a lot of news flows, I think, will start January onwards, especially closer to the budget. So we'll watch out for that. But as of now, things seem to be slightly better for the Indian markets, because at 200-day moving average, I think that volatility is slightly lower. Next week, 20th November, we have the Maharashtra elections. 23rd is when the results of Maharashtra election comes. So I think next week is also crucial equally, with the BJP trying to grip power once again in Maharashtra with help of its allies. Whether or not it's possible, obviously the election results will say, but as the markets will till then try to be sideways, or probably look at some decisiveness which could come in next week.
That's true, Yatin. But then on that note, let's talk about the broader end of the markets. Quite a few movers and shakers there. But good part is that mid and small cap indices managed to stage a comeback.
Yeah, managed to stage a comeback, and stocks like Geo Financials, Deepak Nitrite, Jyoti CNC worry news, good moves coming in there. Policy Bazaar, HFCL, Suzlon also doing well in trade, and Zomato also. Swiggy was down today 4%, and Zomato was up 4% after the Tefano inclusion news came in. What did not do well is AstraZeneca. Post the numbers, stock was down 5%. Torrent Power, Ecums, as well as Bikaji Foods. These were the stocks which typically saw some profit taking. But stocks like Chennai Petro, Westlife, Nestle, IndusInd Bank continue to struggle, and all of these stocks are at 52-week lows.
That's true, Yatin. FMCG, that urban slowdown, coming as a concern when you look at the earnings. But of course, let's talk about the stock of the day then. Eicher Motors, that stock was rooming ahead in trade today. Of course, I think it had its best day since mid-2020 on the back of not really earnings. Earnings were a miss. It was an all-round miss, so to say. Margins missed expectations, but it's the clear shift in strategy that the management has highlighted. That kind of found favor with the market, given the fact that they will be now focusing on lifting Royal Enfield volumes over margins. And that found favor with some of the brokerages as well. It has got a couple of upgrades coming in. In fact, MK has upgraded the stock by 3 notches from sell to buy. And some of the brokerages also believe that the tough competition phase that it saw from the likes of Hero and Bajaj may be behind for Royal Enfield. So these are some of the pointers that really drove such a good rally in today's session. Company, as I said, will be prioritizing volume growth, and in the this quarter as well, the Royal Enfield volumes were quite okay, and that's what the street took heart from. Nomura has also upgraded the stock to neutral from reduce. In fact, they have also raised their target price to a little under 4,400 rupees per share. And they have taken note of the shift in strategy to drive volume growth, and that is something that they found very encouraging. And they also believe that if there is a market share loss, it will be more gradual and not as fast as they would have anticipated. Of course, they also launched a few models which found good demand and good response from response, right? So that also bodes well for the company, and they have raised the FY25 and FY26 volume estimates for Royal Enfield by 3 to 5%, but they have lowered the margin estimates by 20 to 40 basis points over FY25 to FY27. Morgan Stanley also has an underweight call. Target price is at 3,655, and they also believe that growth over margin is the right strategy for Eicher Motors, but valuations may have kept them a bit underweight on the stock. Jefferies also has noted that volumes are picking up, and that Enfield will actually be among the key beneficiaries of premiumization in the two-wheeler space, and they've also pointed out that the toughest competition phase may be out of the way. Aside of that, exports are also showing good traction for Royal Enfield, in fact with new assembly capacities being established in Brazil and Bangladesh. Nuvama has also upgraded the stock, and they have raised the target price by over 22% to 5,500 rupees per share. Look at the stock performance of Eicher, Yatin. If you look at the last 1 and 3 month performance, it has overtaken both Hero and Bajaj, because both Hero and Bajaj have given negative returns over the last 1 month and 3 months, but Eicher has given positive returns of not great returns, but still it is positive in comparison to the other 2 competitors.
Yes, and Eicher Motors, I think the competitive pressures are now easing. The markets earlier assumed that with a lot of competition, be it Harley or be it Triumph from Bajaj Auto, things will not shape as good for Royal Enfield in terms of market share. But I think things are now gradually behind us. The intensity of competition the markets probably assumed that is not the kind of competition which is seen on the ground. I think people are still fans of Royal Enfield products. And Nomura today upgraded the stock. They assume 5% higher volume than their previous estimates. We also have Jefferies, which had a 5,500 target on the stock. So I think brokerages are quite bullish on Eicher Motors, and the management also really reiterated how Royal Enfield can do better volumes. But what was also doing well in trade was Varun Beverages. Now this is one consumption stock which has never looked back. Value creator, market capitalization more than 1 lakh crore. They finally have launched their QIP at a 1% discount to yesterday's market close. The base size of the issue will be 5,500 crores with an upside or a green show option of 2,000 crores. So in all, Varun Beverages is looking to raise 7,500 crores. Why this fund? Because they've acquired businesses in West Africa as well as Africa. wherein they will be acquiring PepsiCo's bottler in Tanzania and Ghana, and they are also looking to acquire Lunar Mech Technologies remainder stake, which was held by the founders and shareholders. So a lot of inorganic growth opportunity which Varun Beverages feel could come in from the African market, because still the growth stage is nascent there. They are developing economies, third world countries. So probably the levers for growth there, especially for beverages, is too high, and hence probably Varun Beverages is looking at some good acquisition or strategy there. Plus we also had Varun Beverages, which has got into the F&O segment also, because yesterday's NSE circular had announced 45 new inclusion in the F&O space, and Varun Beverages is one of them, apart from Zomato, Jio Financial, HFCL, all of those stocks. But yes, Varun Beverages in focus for three things. Number one is fundraise of 7,500 crores. Number two is the African acquisition, and that is the reason why they've launched the QIP to fund that. And number three is the F&O inclusion, post which the shares saw a 5% move coming in.
That's true, Yatin. And numbers had come out a couple of weeks ago, right? Third quarter numbers, since it follows calendar year, and it had reported mid-single-digit volume growth, and numbers were pretty much in line with estimates. So the entire theme of urban consumption slowing down, that did not really impact Varun Beverages that much. And of course, aside of that, it's expanding its footprint as well, and of course now raising funds to fund their growth plans. So that's one stock, has been a multi-bagger, so to say, ever since it listed. But aside of that, let's shift focus to the agrochemical space, Yatin. PI Industries, although operationally it was a good show, in contrast with UPL and the other chemical stocks, but it was the guidance cut, that spoiled the mood for PI Industries, which lost somewhere around 4% or thereabouts in today's session. Mind you, it's the second time that the company has cut its guidance. Earlier it was 18 to 20%, they brought it down to 15%, and now it's in high single digits. Correct. So that's something that has come as a major disappointment. Of course, the company has pointed out that there are global challenges, and that will continue to weigh on the company. Look at the revenue growth, 5%, 6% jump in profit on a YY basis, so not bad. And even a 200 basis point expansion in its margins. But guidance cut, of course, and the future outlook as well. Yatin, they've said that elevated inventory levels in export market is leading to slowdown in the product offtake. And they've said that continued destocking and pricing pressure from generics for the next few quarters is being witnessed in the domestic market as well. And pharma business for the company has been weak in the second quarter, where revenues dipped and EBIT loss has also widened. And if you look at some of the brokerage views, although Jefferies has maintained a buy rating and target price of 5,100, they've said that exports continue to see double-digit revenue growth, and domestic revenue is also in line and slightly ahead. So they are still maintaining the faith. But if you look at what UPL did, Yatin, their numbers weren't all that great, but their outlook was good, which is why I think UPL saw good recovery after reacting negatively to its earnings. But for PI industry, even though operationally it was a good quarter, looks like the going will be a little tough for a couple of quarters.
Absolutely, and PI Industries, the problem is not only global but local as well.
Yeah.
Wherein both sides we have inventory build up and channel inventory pushing prices lower. So there is pressure on pricing, plus you can't push your inventory because there is already sufficient inventory in the marketplace. That is the reason why I think they have got their guidance down also to single digits.
That's true, Yatin. I think those were all the stocks on our radar. It was kind of a washout week for us. Let's see what next week holds. For now, the markets will, or investors will take heart from the fact that we have maintained those 200-day moving average levels, and 23,500 is intact as of now. But next week is a crucial one, Maharashtra elections, and then results thereafter. So lots to watch out for. But for now, I think it's a good buy from us. Truncated week. We'll see you on Monday with the markets, but have a great weekend and come back and join us. But also stay tuned to Money Control over the weekend for all the other news and updates that we'll be bringing you. Thanks a lot.